Good morning, everybody. Welcome to a wonderful panel discussion on fund administration. My name is Dan Strackman, and I'm going to be the moderator for today's program. I want to first off thank the folks at Duff & Phelps and the IMDDA for putting together this great program today. We have three experts in fund administration, and I'd love to first get them to introduce themselves, and then we're going to get right into the topic. But before we do that, I just want to remind everybody that if you do have a question for the panel, you're welcome to put it into the question box, which is on your screen, and we will try to get to it. And if we don't get to it, we will most likely be able to get to it offline for you. The other thing is, I know you're going to want to return to this session time and time again. So this program or session will be posted on the Due Diligence Insight events page on the Duff & Phelps Kroll business website. I was reading that to make sure I had it correct. That's the last thing. That's the last thing I'm going to read all day or all for the next 45 minutes. But anyway, the program will be posted on the Duff & Phelps Kroll Business Due Diligence Insights website, so you can share this with all friends, family, anyone in your organization, and anyone you walk across and meet in the street, because this is the panel we have today. So with that, let me first introduce Claudia. Please tell us a little bit about yourself and what you're all about and your firm.
Hi. Sure. Hi there. This is Claudia Bertolino. I am the Global Head of Business Development for Citco Fund Services. I have been with Citco for 21 years this year. I actually started, I have a pretty interesting history and certainly something that resonates with the market. I actually was acquired via a staff lift-out arrangement in the year 2000, formerly with Tudor Investment, to outsource back and middle office services to Citco, who was their legacy administrator. I began in fund accounting, ultimately ran the fund accounting function for North America for Citco for the balance of about 15 years, then went into client service and ultimately business development. So that's the function I play at the role today, and I'm thrilled to be here, happy to answer any questions that anyone has for me.
Thanks, Claudia. That's congratulations on 21 years. That's quite impressive in today's movement and change that's happening with folks around the world. Let's start with that. Let's go with, because I know Bill's got the most to say. Let's go to George first. George, tell us a little bit about you and what you're doing over at Apex.
Sure. Thank you, Dan, and thank you for hosting us. George Archibald, I'm head of Apex Americas. We're a $1.1 trillion administrator / fund services provider. We provide fund administration, corporate services, and financial solutions to clients. So we really look at clients from a middle back office perspective and want to service them front to back with all services related to their businesses, excluding audit and legal. So very much focused on that partnership mentality and on helping support managers as they run and grow their businesses. I guess back to you, Dan.
Thanks, George. Appreciate that. Bill, please.
Yeah, hi. My name is Bill Salas. I'm the current CEO and founder of Paddock Consultancy, which provides executive and strategic advisory services into the fund services space. Also co-founder of an investment bank called Paddock Capital Markets, which we launched earlier this year. And again, bringing transaction advisory services to fund services, financial technology company, and the whole ecosystem around investment servicing. I've been a career investment servicing professional for too many years to even mention, and try to parlay that experience to help our clients as they navigate through some exciting times in this great space.
Great. Well, thank you all for that introduction. Appreciate that. So I think we should jump right in, and let's talk about number one. What are the range of services that fund admins are offering now? And also, how is that range of services evolving or changing in light of the activity in the acquisition space, the merger space, and the transaction space in fund admin? So I don't know, Claudia, if you want to start there, or George, from a perspective, then Bill, as sort of the guy putting these deals together, you could give us some insight as well. So who's up? Claudia, go ahead.
I'm happy.
Okay,
Go ahead.
George, go ahead.
Go ahead, George. No, that's fine. Go ahead.
I don't care if I go first or second, but from a range of services, clearly, our clients in the market is looking for a fulsome suite of solutions. We've gone from really a historically monoline business, if you go back in time, to one that offers really a front to back solution. So everything from the investment all the way to the investor, and providing that ecosystem really has multiple benefits. We also support the management companies as well. So from an Apex perspective, we have grown product-wise, and we've done it two ways. One, organic growth and capability enhancements, and then inorganically, where we see businesses in the ecosystem that can inure to the benefit of our end clients. So a great example of that is we did an acquisition approximately 2 years ago of the Link business. And that Link business out of the UK provided really support services for management companies, amongst other services. And those services are ones that we took to the market, helping management companies do management company accounting, books and records, payroll, insurance, et cetera. So not only did we want to support our clients on the fund side in this particular use case example, but we wanted to support them as they expanded globally, opening offices around the world in one type of use case. Other use case is the manager that's spinning out of an existing shop that is looking really for that fulsome support structure. So we very much view the world through that lens in terms of partnership and client. And I'll stop there.
Great, thanks. Claudia, how about from your perspective?
Sure, of course. So as you can imagine, similarly, the world of fund administration has certainly had quite an evolution. Gone are the days of the sort of early month-end sort of far delay, verification of a closing of a book. And really, it's more of a support to growth, right? In our current environment at Citco, we see that those that are transparent on their progress, all the way through from the trade to the investor, those that are transparent on their progress, they grow. And in the world of alternatives, now more than ever, growth is not optional. It's essential. So alternative administrator sector used to be just about providing, simple pricing data, but it's certainly not anymore. Right? Investment businesses need one-of-a-kind operational backbones that are built specifically for them around their business, cover all the asset classes, every geography, really delivering everything from financial reporting and banking, to investor capital software, middle office solutions. So they need a comprehensive foundation for growth, which is everything that they need to support the trade to thrive in this sort of new, transparent, and accessible world. And that's who we are at Citco. That's what we are focused on. So we are industry pioneers. We created the alternative fund administration category before, largely, it existed really. And certainly, that which of competition, and those that know us know that we are a core service administrator. We are privately owned with M&A never a part of our growth strategy. So we are a sort of privately owned. It's been our name on the door and our name only And really never have we sort of looked to grow in any other way than to sort of evolve with our clients and the business needs and support needs that they have helped us define over the years. That really has been the strategy towards the growth. So, to circle that back to your specific question in terms of service support, it really is everything you can imagine or that our clients can imagine that their investors need and they need in order to perform and grow for their investors.
Great, thank you. That's helpful. So, and Bill, I mean, you're on the front line here. I know that it sounds like you're probably not advising Citgo on acquisitions.
Not yet.
But I know you are advising others. And it sounds like, George was saying that Apex has sort of rounded out its product offering and expanded its product offering. I think we're seeing that in other fund admins as well. Citgo as well has started offering additional services. So what are you seeing? Is that a trend that you expect to continue, Bill, or you think it's going to break it off again or separate? Tell us a little bit about it.
Yeah, I think in a way, and I think for the audience, it's very interesting to have Claudia and George give their perspectives because, at the end of the day, I think they both said they're trying to deliver more to a broader base of clients. How they got there has been two dramatically different routes, both successful, but two dramatically different routes. The way we look at it is if you fast forward a little bit and you look at what's happening on pricing around not only service provider pricing, but also investment product pricing, both components are being compressed. You could see the days from the investment manager, and particularly we're talking here alternative investment managers, where alternative funds and alternative products are really mainstream now. And the demand for these, institutional, retail, and everything in between, is extremely violent and pressuring the managers to do more with less. And so really you can see a time where an investment manager looks like somebody that's focused on capital raising, focused on developing investment product, and everything else is on the table, frankly. And that trend is manifested itself recently in outsourcing and provides, within such a large market of over 30 trillion, a real long runway for both providers and managers to rejigger its business model. Last year alone, our friends at Convergence tell us that somewhere near 179 fund administrators won mandates. That's a heck of a number. I think all of us here can name 40, 20, on a good day, maybe 25 admins, but there's a lot out there. So the market maintains its very fractured appearance. And I think the fracturedness, together with the trend and push toward more outsourcing of more upstream functionality within the manager, represents a vibrant M&A or capitalization, just a good investment opportunity. We think it continues for a little bit, even at the multiples that we see. We think it's continued. There's just too many providers out there. There's another angle that comes into this, and that is the changing face of technology. George and Claudia both alluded to this. And, in the mix of service providers aggregating themselves, you also find a tremendous influx of technology. We can talk about that a little later, but that has a lot of bearing as well on the changing face of fund administration, which I think, as Claudia said, no longer is GL-centric, is more data-centric. So this whole market is changing fundamentally, is changing how things are provided, and is changing from a buyer standpoint.
Dan, Dan, can I pick up maybe 2 points on what Bill and Claudia said just quickly to round out the discussion? If that's okay.
But before you get to that, I just want to let people know I do see the questions, and we will be getting to them in a few minutes. So don't worry if you're putting questions in and we haven't answered them yet. But go ahead, George, please.
Sure. Thank you. So I think to Claudia and Bill's point on the technology side, there's an interesting lens that, we can put on it. And certainly from an Apex perspective, we've thought about it inorganically as well. So a great, for instance, we have a GL example, but we were interested in the Alter Return GL at the time, now Allview. And we were interested in going direct and getting the expertise within Apex to service clients on Allview/Alter Return, which was a private equity GL. So we were thinking about that, and we thought to ourselves, well, why not actually look at a business that's a super user on Alter Return and think about delivering the service that way versus kind of gaining that expertise organically and taking that amount of time. So, we were kind of thinking about solving a problem that we saw in the market, or creating a solution, and our way to do it, we thought most effectively with the highest level of expertise, was in an inorganic fashion. And clearly, the market, I think, is Bill, to your point, certainly, fluid in terms of opportunities and ways to think about solving problems. So I think, obviously, from a secular perspective, we were in a position to be able to execute on that plan. The other bit is geographically, given our business is global, there are geographic components that we can't really execute on organically in a timely manner. So, we, for instance, acquired FundRock, which is really a Manco/AFM platform, which positions us as the largest Manco out of Europe. And we really couldn't have done that organically. So another lens really is, when you're looking at some of the more regulated jurisdictions, sometimes an inorganic growth strategy is required in terms of kind of meeting client needs. So just those kind of two lenses around kind of maybe a bit geography and a bit about kind of gaining that expertise in a different way versus organic.
And that's certainly true. I think, why it's super beneficial to have the two of our firms actually well placed on this panel together, to that exact point, and certainly at Citco, it's certainly considered. It's something where, the potential for growth strategy changes. It's not as though that's just sort of not considered. But in our case, we find that the ability for us to innovate based on the requirements of clients and their sort of expansion into all the different jurisdictions where we operate generally at this point, which is well over 55 to 60, we find that the time and the effort to innovate actually is where we prefer to place our time versus integrating. And I'll speak to that for one moment. And certainly in the world of due diligence, there are those providers in the admin space that do a fine job with their sort of M&A growth strategy, and then spending the time and the cost and the energy to integrate these different platforms, the different technology, the different cultures, the different workflow operationally for the new staff acquired. And it is certainly efficient for growth. But in some cases, for those that aren't necessarily dedicating the amount of time to making that a seamless integration, we find that we are best suited for continuous innovation. And at this point, as of last month, we've actually crossed the 1.5 trillion asset under administration space. So we continue to remain one of the larger by this sort of organic approach. The other piece that I will say, and you touched on this, George, is the technology relative to proprietary versus acquisition versus best of breed in the industry. And every one of the providers, each of ourselves and our competitors, are consistently doing buy versus build analyses for certain. And we continue to do that. And so while the great majority of the technology that Citgo utilizes to both provide to clients, license to clients in some cases, service the clients, is proprietarily based and developed based on client business requirements, which I've said a few times. But we do use best of breed third-party vendor solutions where necessary in a fully sort of integrated component in order to provide the best suite of technology to support the services we're giving. So again, it's sort of what's your cup of tea. I think as long as the M&A strategy will continue to exist, there is definitely further consolidation of the admin player market as we progress. It is actually a very natural opportunity for firms when M&A happens. We largely benefit a bit from, the responsible C-suite tends to say this is a really good time for some admin due diligence. And for us to, if we're going to be potentially converted from one system, one culture, one workflow to another with my existing provider who just went through one of these transactions, perhaps I'd like to choose which platform, which technology I'd like to go to. And we tend to end up in an RFP process or, in a very sort of natural evolution for a responsible sort of C-suite, process. Right. But, I think it will continue. I think we all will benefit from it, and we're going to learn and move forward.
I think that's great. Bill?
I think it is fantastic. Again, two different roads. We look at it slightly different in that the fund administration is no longer really in existence, particularly at the levels that these two firms play at. It's really a different animal, and it really is all about understanding the information and the data that is that they're sitting on top of, and how to create product organizationally and not worry too much about, well, we have to integrate one accounting platform with or another. That's almost really yesterday's news. And the interesting conundrum that fund administrators, I think, find themselves in is kind of a good news, bad news. The good news is the market wants you to do more, wants the fund admins to do more, do everything. I just want to raise money and make product, as we said before. But, notwithstanding Citgo and Apex, fund administrators historically weren't good developers. They weren't even good technologists. They were using third-party technology mostly, and they were fund accounting, the lens they viewed the world. So now they're being asked to do more, but step out of their comfort zone and become a product manufacturer. Both of these firms have done a great job. The digital bank of Apex, the real estate drill down of Apex, the treasury management product of Citgo. Both of you have excellent social impact reporting. These are things that don't care about, where you're doing a nav on, right? So this is a fabulous view, but not everybody can kind of get there because, the fundamental cost of a fund administrator is people and a little bit of technology. And that's the wrestling, and that's what's causing this rub in the marketplace. And it does, if you look at selecting an administrator like investing in an administrator, your eyes become a lot wider. And you almost have to do that nowadays, particularly if you have an institutional client base as a manager, because you're going to get diligenced by your clients on the diligence you have done on your service provider roster. And so you have to look at things as, are they making money? Are they stable? Are they wasting money? Where are the credentials of the people? How do I get serviced? On top of, where's my development trajectory? So we do still think this is a real mix. We're not clear whether it makes a difference if you aggregate to that end or not aggregate to that end. There's still a lot of fund admins out there to be dealt with.
Well, I think that's good. And I think you bring us into an interesting point. Let's talk about how due diligence is being done on fund administrators now. Obviously, we're sort of in a pre-post-pandemic period. But for the last year or so, we've had a lot of people doing due diligence virtually, doing Zooms or I don't know what the system's called, on 24 or something like that. Anyway, but doing it this way. So tell us a little bit, from all of your perspectives, sort of what you're seeing from institutional investors, how managers are working with you to present, their products to their potential investors and existing investors. Give us some insight there, please. I don't know, George or Claudia, you want to start? Who you pick? George, you went first last time.
Claudia gets to go first this time.
Yeah, absolutely.
Sure. So definitely a big topic. And certainly 2020 was a super interesting year for all of us as it related to how exactly due diligence was performed. Since early 2020, we've seen an increase in due diligence questionnaire volume and complexity, really higher scrutiny on processes and controls during virtual ODD, notably cybersecurity, of course, and expectedly and applaudedly a surge in interest in diversity and inclusion policies. Virtual ODD grew in prevalence from March to July for us at the onset of the pandemic. Before then returning to kind of normal levels, we saw an overall increase of 20% in investor due diligence requests of Citgo specifically, right after the pandemic breakout from March to July. And then, although there was really only a 3% increase in 2020 overall. So really front-loaded, tons of due diligence right as all of this began, really wanted to make sure that we were set up for success. Asking a lot of questions. How did we deal with going virtually? How quickly did we get our entire workforce in a work from home capacity? What level of deliverables were missed, if any? What were the delays around that? Sizable increase in cybersecurity questionnaires. That's a 25% increase in 2020 for us. 80% of that between March and July. So I think that in terms of trending and where all of the questionings came through, I think that's definitely what we saw. I think another actual useful metric is that while we witnessed a rise in investors using ODD consultants last year, of the requesters that Citgo received throughout the entire year, the top 4 have been ODD consultants, and that was about 30% of all of the due diligence request volume. So 30% of our volume came from 4 ODD consultant firms. It's a lot.
I'm not sure what that says about the industry, and maybe we all should be getting in the ODD consulting business because I wonder how good a job they're doing. That being said, George, tell us a little bit about what you guys do as well. And I know that from the IMDDA's perspective, our industry forum, we've got hundreds and hundreds of members on it, and they're always talking about how do we do due diligence with fund administrators, how to look at them. And I know that, the IMDDA membership primarily is institutional investors, so they're always thinking about it. And actually, what would be interesting, Claudia, just to real quick on your point, we see that most of the members of the IMDDA are saying they don't want to work with ODD people. They'd rather do it themselves because they can't trust the data that they're getting from some of these due diligence consultants. So interesting to hear your numbers. George, what are you guys seeing?
Well, I think I broke it out into kind of 3 different areas. First is I'll answer the top of the kind of stack first is ODD on Apex. So managers doing vendor due diligence. And I think just the additional lens and certainly consistent with, I think, what Claudia said, but I just add one lens, depending on jurisdiction. And again, similar to Citgo, we have a very global business. So depending on jurisdiction, the regulator in that jurisdiction may have kind of points in their respective contracts that deal with data security, with cyber, and specifically on how that information needs to be kind of parlayed back to the regulator and in what structure. So oftentimes, a lot of these kind of ODD types of exercises, and certainly with the larger institutional clients, we see this, is we're actually doing the process together with our legal team, because what we need to do is be very smart around the regulator and the rules per particular jurisdiction. So that's just, I think, a lens I would add to what Claudia said. The other themes that Claudia touched on, very consistent for us as well: SOC 1, SOC 2, cyber, work from home, KPIs, all of that's totally in line. The other one is, the LP ODD on managers and how that kind of is reflected. So that was my point number 2. What's interesting there is we have, and I think, Bill, you mentioned this quickly, but we've done a lot around ES&G, environmental, social, and governance, and specifically around private markets and private companies and private equity. So we have a tool that is used by our private equity sponsors in terms of ranking and rating companies. It's a data tool, and it's something that's actually homegrown. So, something that we evolved organically because we actually looked at the landscape, didn't see anything we liked out there, and said, we're going to be the best, and we're best positioned to do this internally with our team of experts, and we've hired on top of it to solve for that. But what's interesting about that is that what we're seeing is that managers are getting really these DDQs or ODD requests, and they can have a general DDQ, and there could be an ESG questionnaire inside the DDQ, but oftentimes there's actually a specific ESG DDQ that the manager is getting from the LP. So I think, Claudia, you brought this up. Diversity, equity, and inclusion falls into, obviously, ESG, right? Environmental, social, and governance. So we have kind of the social aspect. Sometimes it bleeds into the governance, but that's just a very interesting evolution that we've seen with respect to the manager kind of having to answer these types of questions. And then here's the connected to part 1 is, and then going back to their fund administrator and saying, we need to provide this information to our LPs. Can you help us? And then all of a sudden, the LP question is not only how do you address this manager with respect to the way you invest, but also what's your lens to your vendors? Do you impose ESG selection criteria on the vendors that you choose? And then all of a sudden, it gets put into bucket 1 when the manager is actually asking us about our organization. So that's just a very interesting example for everyone on how point 1, which is vendor ODD, and then point 2, kind of LP ODD on the manager, actually interconnect on ES&G and diversity, equity, and inclusion. So those are kind of the 2 main points I wanted to pick up. And then clearly, I think, Bill, to your point, in the virtual world, ODD can be very efficient and really very effective. We've done some M&A there, point number 3. And, on a data perspective, it's being able to validate data and being able to check data. And if you can validate and check the data, ODD can be very effective and efficient in a virtual world. So that was just kind of, maybe I'll call it a point 3 or a point 2B, but still very interesting if we think about how all these bits and pieces fit together and the commonalities across those bits and pieces. So I'll stop there, but just an exciting time for all of us, because I think there have been some net developments and net benefits to the overall market.
Yeah. Bill, do you have thoughts on that?
Again, I think it's excellent and remarkable on the amount of progress that both George and Claudia have made during pandemic. Again, maybe we see it a little differently, that the pandemic has shown a pretty bright light on the efficiencies of LP, GP, fund structure, asset level connectivity. There's just too much noise. It's really not a digitized market. Up and down. LPs are still clamoring. There's an abundance of Excel spreadsheets everywhere, including within managers' central organization. Simple things as sub-read processing, dealing with unstructured data, dealing with PDF information, dealing with overall document management, eliminating wet signatures, creating data lakes that can be used for real intelligence by the manager for the LP and by the LP for its decision making. And I think the pandemic has, put a little bit of fire under projects that were left behind pre-pandemic. When everybody woke up around the fall and said, holy criminy, we didn't get anything done yet this year, and then started to get back on some of these tech initiatives. We found the pandemic actually not really an inhibitor to getting large projects, large development done. It certainly didn't stop the M&A market or the capital investing market, didn't stop the deployment or the due diligence on those deals. But it did sort of shine this bright light that with all the cool stuff that's coming down from either small administrators coming out in the crypto space or large administrators doing some of the things that we're doing here, that it really still is a long way from a pure digital marketplace. And that's really, again, the goal at the end of the day.
I'd actually like to comment there. And this is a really great example of kind of ties in the whole sort of client business requirement benefit that we've experienced at Cicco. One of our largest European-based clientele a few years back wanted to partner with us to digitize the investor function, the entire investor experience. We actually went live with that in the summer of 2019 and started rolling that to our client base. So the ability for us to provide a portal that fed into our current service portal that was used for fundraising purposes, for communication, with a secure data room, for marketing purposes, that ultimately digitized the initial subscription capital commitment process into that digital space, provided a secure place for them to transact, and ultimately, once approved by the managers, all that downstream data entered our systems without having this sort of push and pull and PDF and Excel and CRM system, back and forth. So when we reached the pandemic, we had rolled that out. It was available to roll out. And as you said, the pandemic proved a perfect time for us to accelerate some of that rollout. In our minds, with the rise of hybrid working concept, digitization of the IR function is essential. Data is the key to everything that's going on. The more transparency that's available is essential, and administrators are best poised to do that. I think that's going to evolve very rapidly.
So we've got a couple nuts and bolts questions, and we're running up against the clock here. But Claudia, you sort of jumped into this one without, I think, knowing it, or maybe you did. What is the view right now on digital signature versus wet ink? And are you people moving away from digital signature to only wet ink, or vice versa when it comes to subscription and redemption requests? Any thoughts on you? I'd love to hear. Citco has a specific policy on this, or George, you guys have one over at Apex, and Bill, what you're maybe seeing in some of the firms you're consulting with. Anybody?
Yeah, I mean, what we see is a trend away from any paper whatsoever. And in fact, really, it's beyond any paper, and really creating more of a broader based multi-purposing of the same information. So LPs not only not completing anything, documents on hard copies or web, but have the ability to repurpose that, for example, sub-read documents elsewhere. Right now, I think the space, I'll go on a limb, I'm sure Claudia or George will correct me, but the private markets investing space is not Amazon. We're still back in going to the hardware store, picking out the tractor, going to another store to get another price comparison of a tractor and buying it somewhere else. I think what it has to get to is, as an investor, we want to go into the store, we want to do our comparison, and we want to transact right there online. And that's one of the trends we look for in some of the emerging technologies we deal with.
And I think, Bill, that's a great point. I think, overall, I think that certainly is correct. There are obviously some jurisdictions where, you have wet ink requirements, and Luxembourg being one of them. So, the market could demand something, and the regulator could say no. So, the CSSF, or the Irish regulator, right? There are what I would say, jurisdictional limitations, but the technology is there, and importantly, really the development on blockchain is there, right? So you can create really, private blockchain. You can evolve that over time to a public blockchain. And to your point, Bill, that will add to the ability to turn this marketplace into one with less friction and less bottleneck, and ultimately create a much more fluid marketplace for, I guess, the term that Claudia termed at the beginning, which is, the alternative, investment asset class, right? So that you can buy and sell underlying interests in a more fluid manner. So very exciting, I think, for both of our firms to be really at the forefront and be investing actively into the digital space, including the blockchain area, where I think we can make significant strides is an industry from a secular perspective, because the market is demanding it, and certainly there's the ability and certainly the manager desire to further build out kind of private markets infrastructure. So there's a lot of activity, Bill, I'm sure that you're privy to in that space, but it's very exciting for us to be in that dialogue and in the space innovating.
Claudia, any thoughts there or any follow-ups?
Yeah, I mean, I'll echo that. I think absolutely there are some jurisdictional restrictions, but that's the exception and not the rule anymore. I think whereby the investor community, even just 5 years ago had more of a hesitance to sort of move towards a fully kind of digitized and virtual and online experience. This past year really did prove that that was the safest. I think, everyone's experienced the high volume of phishing and cyber attack, attempts. And I think that email as a communication mechanism, those days are numbered. I think the more that the industry focuses on the safety, the more that data and the safety of data and the transport and sort of gesting of data, normalizing of data, pulling, in George's example for ESG, providing a product to our clients to give them an opportunity. There's vendor data out there. It's very different and not normal for someone like an administrator to run a portfolio against it and provide a dynamic dashboard that's online, that's iPad available. That's an important piece of decision-making workflow that we think is going to, again, continue to evolve, accelerate as it moves forward.
Yeah, no, I think that's right. And it's interesting because we are clearly coming out of a difficult period, but a period that spawned innovation and new tools to be created and used by everyone. We have about 1 minute left, so I'd just like to get to one last thought here. There are a lot of people who think fund administration is becoming commoditized, that you guys are in a race to zero, similar to the retail brokerage industry and the How are you guys as firms positioning yourselves to avoid commoditization, basically? Any thoughts? I know that's probably not more than there's more than a minute answer there for both of you, but I'd love to get your thoughts on that.
So what do I have, like 10 seconds, Dan? In 10 seconds, I think the answer is, we at Apex, we're innovators, and we want to innovate and create really scale and operating leverage for our clients. And we think the answer is really around data, and it's normalizing data. It's investing in technology that will actually kind of bring that element into infrastructure. So you could think of it from a valuation perspective, creating hashes and other kind of innovative technologies so that, companies that manage private assets can have a better view through to what those assets are worth. And, we could go on. But I think, the headline is, innovation, efficiency, and I completely disagree. We're not being commoditized because we're no longer just fund administrators. I would agree if we were just providing a NAV, but that's not what we're doing anymore. So the business has completely changed, and the demands of our clients and their LPs have completely changed. So we'll stop there.
Claudia?
Yeah, I mean, we are literally the foundation for growth. We are the folks that are a key driver in the process of the continued growth and evolution of the alts industry, because the multi sort of strategy, investment, multi-asset nature of all of these sort of investors and investors is that they're going to continue to evolve. The complexity is going to continue to evolve, and being well positioned to continue to focus on how do we best, from an impeccable client service perspective, try to anticipate their next need, or when they have the next need in a whisper format, when they're starting to think about it, be that partner that comes to the table to discuss it. How do we do this? How do we do it together? How do we build it with automation? How do we build it with scale? How do we build it with follow the sun and technology? Again, I don't see that being eliminated. And while efficiencies are created, and certainly there has been some fee compression for all of us on the manager side and on the vendor side, I think those that continue to focus on the growth aspect and the expertise and really the client service, aspect of it, will continue to grow.
Bill, before they give us the virtual hook, come on, give us a couple of thoughts on this.
I won't pile on to what was excellent statements there, but I think the answer net is more and diverse revenue. And here's I'll give you a trend instead that fund administrators now are trying to look or should be looking for, and that is the increased retail investment in private equity securities. And with that increased retail investment, we think is going to push another, and that in itself is a challenge to service and may encompass all the digitization that we talked to in the last segment. But what we also believe is that that's going to push the secondary market, because as retail investors get into private markets, they're not going to have the patience to wait 7 or 8 or 9 years for a result, for their payback. And so after a while, they're going to want to turn that investment and turn it through their RIA. And so I think everything that George and Claudia said, but in the retail side of things. Thank you.
Okay. Well, look, there was one question about cryptocurrency fund admin that we didn't get to, but I assume both of you guys could answer them, or all three of you could answer them. With that, I want to thank everybody for participating today. I think we had a very robust conversation. Really interesting to hear what's happening. So Claudia, George, and Bill, thank you very much. And I think with that, you're going to give us the hook. So have a great day, everybody. Stay healthy.
Thanks, everyone.
Appreciate it.
Appreciate it.
Anybody know how to turn it off?